Didn't quite get the full extent of the upside move. But we did close a little bit above VWAP for the day, failing to gain local high and still a little bit of ways from the all-time high. Bulls really weren't able to get a handle on those calls that they bought this morning at 55, despite quite a lot of effort. Seems that things distributed it out into the end of the day. We started to sell off, closing a little bit below 40. Um, Obviously, this is all setting us up going into CPI tomorrow, which will be our first BLS release since the government shutdown going on almost a month ago. Over here on ES, we broke out above the bull confirm, and we got a few points of price action. That is, however, turning around a little bit here at the end of the day. In the overnight session, I would look to 66 and 50 as potential supports. If those fail, we could get a bigger breakdown, maybe back towards the prior like overnight low. If this upside breakout actually starts to fail, consolidation is a little bit bearish, and things are turning down a little bit. Yields rose pretty much across the top of the curve with the 3 and the 6 month flat. Dollar up today. Alongside a very strong move up in oil, which moved up 5.35%, copper 1.88, and gold 1.7, still pushing back up off of 4,000 and finding a fairly decent amount of support in this range. We saw a big push in correlation. Dispersion trade picked up throughout most of the trading session, only to start falling off the very end of the day, as we saw volatility pick up and some profits getting taken from those in the money positions. Um, Commodities up. Oil is getting fairly close to $62 a barrel. That's the point at which it becomes a little bit inflationary, and that might start to worry bets on Fed fund, like federal rate cut for December. Right now, October is still priced in at 100%. So CPI can affect that tomorrow. Obviously, I think there's a potential for core to be a little hotter, but I'm thinking headline will probably be fairly flat, without any like aggressive pass through from the cost increases on the manufacturing and production side. However, year over year, core above 3% is going to misalign the Fed's targets. And it's going to give Jay Powell a pretty tough decision next week, along with the rest of the Fed presidents who already think that we might be skirting a little bit below where neutral should be, and our policy may not be actually restrictive at all. Um, Bond volatility pretty flat. That might pick up a little bit today. We see finally a little bit of return on the top end of leverage in the carry trade. However, the short end still pretty flat. Forward yield on volatility fell today down to negative 8.72%. We see a downturn in the 10-2 year. Skew continues to move up. Still no significant moves in breadth, and Q outperforming today alongside Russell, but the Dow underperforming a little bit. We're still seeing a pretty consistent degradation and positive correlation between cash VIX and VX. So we are getting vol shorting. I don't think any of it's very long dated, and obviously tomorrow's event volatility could turn that around very quickly. But they are coming in. It's just the positioning isn't very strong. Fed fund future expectations for cuts fell with June falling to about 0.615. Um, looks like uh, looks like March fell to about 4.42, and the January contract's still pretty flat. Um, the 10-2 picked up a little bit, nothing significant there. So for spreads, still like 1 point. And we did see not much of a change in leverage day over day. I think leverage is actually pretty flat here. So probably just positioning higher going into the data. I don't think there's a lot of support for this range, and if the data is bad, we will probably fail. I don't know how much, but I could see, given the fact that gamma turns negative so quickly on the chain, CPI could definitely present a significant amount of downside if inflation is hotter than expected. So keep that in mind. We almost tested the 20 MA today, found support, moved up off of it, but we didn't get a new high. That 20 MA level and the 30 EMA to the downside both remain important, as does the all-time high that would finally mark a reversal. I would say that if we have a positive print tomorrow, we're likely to see a new all-time high. But without that, I think it's very possible that we fail down through like the 6650 level, maybe even back towards 6600, where we would be butting up against the 50 MA without any confirmation of how the trade negotiations are going to go next week. I think it would probably be fairly hard to slip into more bearish levels from there, but that'll really depend on the uptick in volatility. If we look out here, most of the things sold off yesterday, bouncing back a little. Producer manufacturing really leading the pack there alongside electronic technology. Finance still looks fairly choppy. Amazon's still overperforming, and Tesla clawed back some of its earnings losses, although not. I don't. Well, did it claw back all of them? Yeah, it did. Closed up a little bit today, about 2%. So the sell-off didn't last too long there. Although some of that might just be shaking out positioning. I know there was a bunch of positioning like 450, 460 going into earnings yesterday. So we'll see if maybe on Tesla, look to see if calls start to get sold to the upside of spot here after the bounce back, and if positioning turns a little bit more bearish. I think that's it. Yeah. So thank you guys so much for tuning in, and I will see you bright and early tomorrow. Oh, and tonight, don't forget to attend the Gamma Strike Roundtable, either here on YouTube or over on the Discord, and maybe think of some questions you want to ask us about how to use the platform more effectively. Later.